impact as well. But that's not the only reason to get in JP Chalasani, who is the Managing Director and Group CEO of PunjLloyd. There is so much happening in that group that it's a good time to get him in and talk about all that's happening within PunjLloyd. And he joins in right now to speak about precisely that. Mr. Chalasani, good having you. Thanks so much for joining in. Good morning, Neeraj here.
Good morning.
Would want to talk a lot about PunjLloyd as well. But let's just start off with what the clearance or the land ordinance bid that happened yesterday does for the infra space at large, because it clears up a lot of hurdles for land acquisition via PPP. Do you think infra companies are probably the best placed right now to reap benefits out of this?
Absolutely. I think if you look at in this country, when you take any infra project, and if you take the project time cycle, I've been saying repeatedly, 2/3 of the time is consumed from conceiving the project to the financial closure. Actual construction takes place only 1/3. The reason for this is the delays in approvals and delays in land acquisition. You can see n number of projects in this country which are stuck because of the land acquisition on this. I think what this government has done initially about talking about faster clearances in terms of environmental and forest, that's being put in place. Now the land acquisition, the easing out this process would certainly help on this, because the biggest impediment for infrastructure projects to come on time is your development period. That has got to get reduced. On the contrary, on the construction cycle, if you look at it, in this country, we have been reducing the construction time period from time to time. Look at power, which used to take about 48 to 60 months, depending upon the size of the unit, has now come down anywhere between 24 to 36 months. While we were able to reduce the construction period, but the development period is actually been increasing over the period of time. And the number of examples where the developers have finally left the project because it was taking years together. I think this is a very good step in that direction, coupled with what they're talking about, the faster environmental clearances, faster forest clearances, and getting into an arbitration process getting simplified. I think these are all the right ingredients to see that infrastructure projects come up very quickly, which is, I feel, is the need of the hour for this country.
Mr. Chalasani, hi, morning. The market also has been very excited with you getting the FIPB nod, clearing the way to set up defense manufacturing facilities as well. How soon before we see any plan put in on paper, and are there more approvals needed for that?
See, on the defense side, again, like infra side, a lot of exciting things are happening in this country, and we have a large game plan in terms of defense sector. As you know, that we have a large manufacturing base already existing in Malanpur in Madhya Pradesh. We've been manufacturing for Indian public sector defense units already on this. Now this FIPB approval, with which the license is what has come, and what the government is talking about further using the Make in India concept to get most of the defense things done here, is we're expecting that this space is going to play a significant role for PunjLloyd as a whole, both in terms of the top line as well as the bottom line. Having said that, I think the process has started now, and it's in 2015 is what we will see that the much more clarity to coming in, and things actually start happening. But however, the defense cycle is a little longer to get converted into a contract, and then delivery of those items will take time. But it's in the right direction. It may be a 3-4 year cycle, but the process has started now on this, and we as PunjLloyd are quite excited about that space.
What's the plan on paper? I mean, what kind of investments would you need for your defense foray, the products you would be manufacturing?
See, we already have as I said, the manufacturing base is already existing there on this, and we have 4 different licenses to make various defense things. Not possible to enumerate everything here, but the wide spectrum of things is what we can manufacture and supply. That's where we have the licenses, 4 different licenses on this. The investment has already gone in. It's a huge setup at Malanpur, as I said on this. What further investment is required is that actually whenever there is the tender comes out, then you need to make prototype, you need to make those models. That's where, depending upon each of the project, would have a specific investments coming in there, and that gets converted into a contract. We're hearing that the government of India is saying that fine, because you all need to invest in terms of developing these products, so we will have some minimum purchase obligations. I think there are certain things which are being debated today, being discussed, to encourage more and more manufacturing in India. Whatever we heard till date in the last few weeks has been very exciting, including in the last week meetings with the defense minister.
But Mr. Chalasani, how big an opportunity could this be for you as a company? I mean, the reason I bring this up is we were speaking to Bharat Forge. They mentioned that they have bid for orders worth $10 billion. There's a small company called Simco, which is a part of Titagarh Group, which said that it's a 125 crore market cap company, but the RFPs run into thousands of crores as well. So the numbers are mind-boggling for some of the Indian entrepreneurs or the companies which have got these clearances. What about PunjLloyd? How big in numerical terms could this opportunity be for you?
I don't want to put a number to it, but obviously the defense contracts, each one of them runs into thousands of crores on this. It depends upon how much of it is the market share is what you're going to capture in this. I can say that as moving ahead, the defense you would see a defense having a significant share in the top line of today the company's top line is about 11,000-12,000 crores. As you move ahead, and you will see that defense actually having a very significant share, let's say in the next 2 to 3 years down the line. So obviously we're talking about north of thousands of crores, but I don't want to precisely put a number to it. It's a substantially large number for the size of the company what we are today.
Yeah, but I mean, okay, I won't press for a specific number, but substantially large would be between 25 to 75%, or could it be lesser than that?
Yes, definitely, in that range.
Okay, fine. Great. So that's as far as the defense bit goes. Now let's talk about a couple of things that were in play. I believe the earlier interaction that we had with PunjLloyd, the updates were that Medicity, for example, the sale would happen or completed, or some inkling of what is happening there would come in by December end. We are at December end. What updates would you have for your shareholders?
So you will hear from us shortly, formally.
Shortly and formally. So, I mean, I'm just wondering, within the next fortnight, you would reckon?
Always, my short term is always in weeks.
Okay, fine.
Definitely you will hear us, you will hear from us formally very, very shortly on this.
Okay, I understand you can't talk more, and I won't actually push you for that. Fair call. Now let's just talk about, again, without getting into numbers, how are things looking for you? I mean, a lot of infra companies that we speak to of late are in the debt reduction mode as well. They'll benefit as a result of the RBI possibly cutting rates in the next couple of quarters too. Does 2015 look a good year for you, both in terms of debt reduction plans that you may have, as well in terms of the interest cost benefits that will come in as a result of maybe a 50 to a 75 bips rate cut by the Reserve Bank?
I think the 2015, I'm more excited about the opportunities coming in than the debt reduction is definitely important. But I think if you ask me that what are we most excited about and what are we looking forward to, is the opportunities what are likely to come in. If you look at 2014, we just the last 9 months talking about this financial year in 2014, we had more than 10,000 crores worth of order we booked, taking our order backlog to about 24,000 crores. But in this 10,000 crores, the order what we got in India is just about 660 crores. Everything else has come from outside India on this. But now whatever we saw in the last 2 to 3 months, the developments happening in this country, the more and more sectors getting opened. The 2015 is what we're assuming is that our share, the order book from India is going to significantly improve. For example, the road sector has opened up now on this. There are about 25, 26 EPC contracts out there. When I'm talking about 25, 26, these are large EPC contracts. We concentrate on larger ones, not the smaller ones. What about 20,000 crores? The bids are due sometime in January on this. And there are more of a BOT projects out there where we bid along with the developers and do an EPC contract for them. Road sector is very exciting, and the metro sectors, there are lots of metro opportunities which are right now in the bidding stage on this. I'm assuming that with the coal issue getting resolved shortly, that the power sector would pick up, and the T&D, they're talking about huge amount of investments, that sector. Therefore, our assumption is that moving ahead, our share of top line, which is still now is only 1/3 comes from India, 2/3 comes from outside India, would significantly change, and overall the top line would go up and the Indian share would substantially go up. I think 2015 is, for me, is that I'm looking at very, very excited way about opportunities which are likely to come in, coupled with these initiatives in terms of the land, the acquisition being simplified, the clearances getting simplified. So I think you will see more and more opportunities from that point of view on this. On the debt reduction, obviously, I've been always saying that that's on our radar, on our target, because that's an important aspect for us. Our debt is around 6,000 crores plus. We are already in that mode of reducing the debt through this non-core asset monetization, what we've been talking about. Whatever is to the extent we can reduce by March, we will reduce. And on top of it, if there is an interest rate easing, which will further reduce the interest burden, and then obviously the margins would go up and more money is available for further investment back into either BOT projects or into EPC contracts.
Right. Mr. Chalasani, the rail segment as well is a big area of focus, and you were looking at metro projects as well within that. Anything concrete that is coming up?
So we are right now in the process of preparing. We just put in a couple of bids, and we're in the process of putting in bids for a few of the metro projects coming up in Noida, Greater Noida, and the Lucknow and other places. So we're in the bid preparation stage. And we're looking at some of the railway projects as well, along with some large Chinese partners to participate in those aspects of this. So therefore, presumably in the next 3 months, we should have some metro and rail projects in our kitty.
Great, Mr. Chalasani. I don't need to wish you a happy 2015. You obviously expect it to be a really happy year for you. So all the best, and thanks so much for joining us today on ETNOW.
Thank you very much.
All right, that's JP Chalasani of PunjLloyd, extremely bullish really about 2015 based on his commentary. He didn't lay it out in as many numbers or words, but he's fairly optimistic about what the year will throw up for them. Various opportunities up for grabs, and they're saying that they are getting ready for almost all of those opportunities as well, including defense, including rail, including infrastructure. Look at the stock, 2.5% up, moving up as we speak. Mitesh, you track this one closely as well, I know. A word on PunjLloyd, and then maybe the ideas that you have for the session.
This is stock, which if you look at for the last 3 to 4 months has been doing a range of about 35 to roughly about 40, 41. We still don't have a clear indication of a breakout happening above 41, but the stock can definitely head towards the upper end of the range, which is around 41, 42. Once we start getting past 42, I think then you might look at even targets of 48, 50 happening over here. But for the short term, I think 41, 42 should be good.